today we are going to talk about one thing that has absolutely changed my life, and that's how to buy a home in your early 20s. Hello, this is David Zai with the Zai Mortgage Team. Growing up, I lived in a lot of really small homes. We started out by living in an 8x10 room over a garage growing up. I think an 8 or 10 inch black and white television with the turn dials and everything. And, just always had that sense of family growing up. So didn't really explore moving out until my early 20s. And there was one thing that I always knew, following my uncle around as he was going to all of his investment properties, and that's always own properties. I was also influenced at a very young age by a very, very successful real estate agent who basically took me under his wing and said, look, David, this is how I've made my fortunes. And really the best way for you to make your fortunes is to own a home as early as you can and be the most uncomfortable, because over time, values always go up. And when you take it from your rich dad, it typically pays off. So let's talk about how to go through this process and how you can succeed as well. Number one is we have to know what loan program you qualify for. Whether you're part of the service, armed forces, and you qualify for a VA loan, or maybe you have a couple roadblocks in your credit and you want something that has a very low money down option, that will be your FHA, and they will actually accept credit scores on the VA and FHA down to 500. Or let's just say you have a little more money to put down and maybe your credit's a little more established, and then you can go with a conventional loan. So we have to figure out what loan program you qualify for and know all the parameters to the loan. A couple of days ago, I was talking to a real estate agent and she said, hey, David, I want to put an offer on this house. And to put the offer on this house, I need to figure out what my budget is, right? Everyone always wants to know what their budget is, what their monthly payment is. And we always talk about game planning, right? We always have to game plan and know everything that's going on when we're going in to purchase the house. One thing to really look out for on the conventional loan is how much closing costs you can get. We send out realtor cheat sheets, but in reality, I think the consumer really needs to know more of the cheat sheet as well, just to make sure that they're having all eyes and all hands on deck when you're going through the most important purchase of your life. Making sure you don't ask for too much closing cost, because you can't use it on certain conventional loans with lower money down. FHA allows you to use more closing cost, and the VAs actually give you the most ability to use closing cost and even use part of that cost to pay off debts. The other thing to consider is the mortgage insurance that goes into these loans. So VA has an upfront funding fee if you don't have any disability. FHA has an upfront mortgage insurance and then a monthly mortgage insurance. And hey, that recently dropped by 30 basis points. So that's more of a savings for you. And then finally, on conventional loans, there's going to be some sort of mortgage insurance on it if you don't put 20% down. And that's either going to be an upfront mortgage insurance, which wipes out the monthly factor, or you have a split premium, which is half upfront and half monthly, or you could just have a traditional monthly mortgage insurance premium. And typically, if you have income restrictions and it qualifies you for certain types of affordability conventional loans, or you put more money down, the PMI gets way more favorable. The second thing is that you need to know what the benefits of discount points are and whether you need to be paying for the discount points. So everyone's going to have their own scenario. No two borrowers are the same. So when you're having that down payment discussion, just know for a fact you're going to get some sort of benefit out of putting more money down. And the increments typically go from 3% to 5% to 10%, 15%, and 20% down. The more skin you have in the game, the better your terms are typically. That means you're going to have lower mortgage insurance premiums. On the FHA, it'll go away after a certain period of time faster. And then on VA loans, the more you put down, that actually reduces your funding fee if you don't have that disability. With the discount points, buying down the interest rate to get into an affordability range that works out better for you. That means is you are paying for upfront prepaid interest, that means paid out before you close on the loan, to get a lower interest rate over the life of the loan. So you're giving the mortgage company less interest over the term of the loan. Normally though, consumers in the United States, we only stay in our homes for about 7 years on average, okay? Whenever the rates start dropping, we start refinancing to get more savings and things like that. So, that's something that you definitely want to factor out, okay? If you're getting a world record interest rate like we did the last 2 years, then you probably want to buy down as low as you can buy it because you know you're probably not going to want to refinance anymore. However, in today's market, when we talk about marry the house and date the rate, getting those discount points and paying those up front right now, you may never get to the point where you break even. So that should definitely be a topic of communication that you have with your loan officer, and I'd be more than happy to help you out. Then we look at income. Income's a really big factor, okay? When we're talking about income, we're talking about, hey, how much do I qualify for with just my income? Can I get a cosigner on the type of loan that I'm getting? And if I could a cosigner, what are the ramifications that I may have to face? So for instance, what I mean by that is we're talking about a VA loan. Typically, it's veteran to veteran financing, or veteran with veteran financing, or it could be a married couple. But in certain situations, you may need to get a non-married, non-veteran to co-sign with you. With that, you would then have to maybe save up for the 12.5% down that's needed and work in that extra time that's needed to approve the loan, because these loans have to be sent directly to the VA to get underwritten. So income's a really big factor, because debt to income ratio is one of the biggest things that we look at. Next topic would be, what expenses do you have and how do they impact your buying power? So if you happen to buy a vehicle when the interest rates were super low and you got that $50,000 vehicle for like $600 a month, congratulations. You got in at a very good time. Now, with all the rates going up and we're seeing CD and interest rates going up on like deposit vehicles, that means that interest rates for standard loans are going up too. So you then have to go in and kind of decide, hey, do I take this money and put more money down on the house, or should I put less money down and take maybe the extra money that I was going to put for a down payment and maybe use that to pay off some of my higher interest rate expenses, such as credit cards and installment loans that are unsecured? When you do that, that typically opens up your buying power as well. So that definitely should be something that you talk to your loan officer about. Next thing that's really important is how to identify your third-party people that you need in this transaction, such as your realtors, your title companies, your home inspection, and homeowners insurance. That's super important. So with your real estate agents, I mean, that's a given, right? You know, you need to make sure you have a real estate agent that has like negotiating experience. They've done a handful of transactions before they get to your transaction, so they're not practicing on you and maybe running into a situation where you get into it and you're like, oh my gosh, you know, I don't know how to handle this. And then you may be stuck buying a house that you don't want to buy, and that's the worst situation to be in. You always want to have title folks that you can depend on and you can trust with all of your questions. And that's a really big key. Trust with your questions. So title companies, they're all there to make money, right? We get it. And there's also many ways that you can take your title. Married, surviving with rights to survivorship. You can take it in a trust. You can do all types of things to take title, but make sure you understand your options. Make sure when you're buying a home, you know what homes are most important to get the owner's title insurance on and what the actual cost is, because some companies are middlemen, right? And if they're middlemen, then they're making more money on the title policy. So, you know, I've seen prices vary by a couple $100 from one title company to the other. Home inspection companies are really important to go through as well. With home inspection companies, you typically have some companies that don't even have to be fully licensed. All they have to do is have a business license, and they can go out there and say, hey, I'm a home inspector. What field do you specialize in? Well, I used to be a woodworker. Well, what is a woodworker gonna know about electrical and plumbing and all these other things, right? They may just be the jack of all trade, right? You need to make sure you have like a home inspection company that you can trust, someone that you can go to after the inspection, after you go and you own the house, and they'll answer your questions and they'll point you in the direction of the best resources, right? You know, knowing someone that knows the resources is really important. And that's something that I value, like that's one of my values, right? You know, is when a customer or consumer calls me and they're asking me for my expertise and my resources, I can tell them, hey, I can help you with this because I've had over 20 personal real estate transactions happen in my own personal life, whether it be on the buying side or the selling side. So I know the ins and outs of home buying. So, and then the last thing would be, I would say homeowners insurance. Shopping for your homeowners insurance is absolutely important, right? You know, there's so many companies out there. There's national companies. There's mom and pop local companies. There's all these different companies. How do you wade through all this to pick the right choice for you? Well, we have to look at it in a couple different ways, okay? Whether you're looking at it from the loan process, from the realtor process, or the homeowner's insurance process. Do you want the quality of the insurance? Do you want the speed, or do you want the price, right? You have to get all of that weighed out and make sure what's most important for you. Quality would be like, hey, if I have a claim, how long will it take for my claim to be paid out? Am I going to have to make phone calls to every party involved to make sure that the claim goes through? Speed, obviously that's really important. How long does it take? Do you have to go pre-inspect my house? Are you going to inspect the house afterwards? Are you going to cancel my policy? Just because they can get it done before closing doesn't mean they're not going to cancel your policy later. And then finally, price. Everyone's shopping for price, right? That's probably the most important thing to choose when you're dealing with your title company, your realtor, your home inspection, your insurance, and your lender, right? And we always talk about it. Go wholesale. Don't go retail. Go retail, you're part of the sheep. And basically you're getting eaten up by wolves and paying $8,000 to $10,000 more in closing costs. And that's just not a thing that I personally like for you as a consumer, especially going into your new house. And then finally, I would say the last thing that we really need to know about is the type of property that you're looking for. Do you have the entrepreneurial mindset? And if you do, would you be willing to go with a multifamily property? Would you be willing to go with a split use property, maybe a business downstairs and living area upstairs that you're going to be occupying? Do you want a condo with low maintenance? Do you want a townhouse with very small yards to cut? Or do you want a single family home that's probably going to have, in my opinion, the best resale value, or manufactured home, whatever it may be? Everything, it works, right? Just know your options. Just know that you have different loan programs to go with. Just know that you have different down payments and different factors that you can look into. This is really important when buying your home in the early 20s, and work with someone that's going to hold your hand throughout the process, okay? It's a very daunting process as is, but to have someone that you can rely on that's not working in a call center that's only 9 to 5 and you can't get a hold of them when you have that after hour aha question that you have to ask, you know, that's what we're here for. This is what we do 24 hours a day, 7 days a week. My name is David Zai. I can be reached at 757-478-8493, 7 days a week, and I'd love to help you on your next house. I'm just saying. Talk to you later.